Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box there. Just give me a little Y or a yes, little Y or a yes there. Just let me know that it is indeed working. Hope everybody's having a fantastic morning so far. Looking forward to trading with you guys today. Awesome. Looks like we're up and running. Let's go ahead and go over our disclaimer. As always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. Awesome, guys. And also just want to welcome everybody new with us. And also want to give a shout out to those of you watching this in the recording. Want to say hello to you guys. Feel free to participate in any way that you can. If you have questions, feel free to put those questions in the chat box as we go about the webinar. If you have questions in the recording, feel free to ask those questions via the comment section down below. All right, guys. So it looks like we're having a decent week. I mean, I was just looking at these scanner signals. I actually posted on the group feed, which we just launched a few weeks ago. For those of you that are new to the program or just curious about this groups feed tab is where you guys can actually participate. Not just the Telegram is where I post things, and only I exclusively can post there. However, if you want to communicate with the group in the program, you can actually go to this group feed, share something. I usually look at this a couple times a day, so you can come in here. You can make a post, you can ask questions, write a comment about posts I make or other people make. So it's a great way to kind of interact with the group if that's something that you want to do. You can show off your trades, you can share trade ideas. It's meant for that type of thing if that's something that you want to do. And all you do to access it is you just go to the hover over members, then go to groups feed, and then right here is where you can do that. So this is the post I most recently made in that feed. I called out these these 5 signals this week, and I think pretty much every single one of those is doing okay right now. Some of them are doing great. Some of them are doing okay. I think maybe one might be down, but the rest of them are positive this week. So I actually took flat scanner signals this week. I've been looking for entries on a lot of these. I've been looking for a lot of entries on a lot of these, and let's see, let's filter this by the strong signals. So right here, these are the strong signals for the week for those that are curious. So the overall signal column, this is probably the most important column when you're looking at the scanner, because what it does is it's a derivative of everything that we look at with the scanner. It looks at the weekly COT data, looks at the long-term signal, looks at the current sentiment signal, and based off of the cumulative score of all those things, the overall signal then says, hey, this is the direction we want to go for the week, and look for trades. You're very much likely to be in the direction of what the banks are buying and selling for the week if you follow that. So one of the things we've been talking about is this Euro franc sell. This is the #1 sell signal. And let's actually pull up the NZD or the Euro franc. It has been down a lot, especially since last week. It's been down a lot. There's been a few others that have been, like I said, really good too. And I kind of want to just re-explain a few things that's going on with this pair.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code Friend of Steve, that's Friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Okay, so this is the Euro franc. We have been selling this for basically a week now. We had a big move to the downside Thursday and Friday right here. Let's just use an hourly chart because the 15-minute maybe just doesn't quite do the justice of this move. So you can see it very well. Here, maybe I'll close out of one more thing. I'm going to close that. That should help. Okay. Actually, yeah, let's go ahead and close. Yeah. Okay, cool. So, okay, here we go. So what's going on here with the Euro franc is we've got, and actually fundamentally, let's break this down even further. So from a fundamental standpoint, let's break it down with the actual numbers. So I'll take you to the journal here so you guys can see what's going on. Yeah, let's scroll over here to the right side so you guys can see what's going on. So when we look at COT data, we're going to talk about this in a little bit more detail tonight in the COT report webinar. So we got a big lineup today. We have obviously got this webinar right now, live trading. And then tonight we are going to be doing the sentiment webinar, which is also where we're teaching the, how to use the scanner for like overnight signals, taking overnight trades. And then we're also going to be doing the COT report per usual, like we do every Wednesday night. And that will be tonight at 9 p.m. Eastern. So if you want to come to those, one starts at 8 p.m., the other one starts at 9. You can come to all of them. You can come to just one of them. You could come to none of them. It's just up to you. All of them obviously will be recorded and posted promptly on the calendar at the conclusion of the webinar. But let's talk about this. And this is, like I said, we're going to talk about this tonight, but I do want to make sure it's very clear because this is very pertinent to how we're taking these trades right now. So when you're looking at the COT data, the non-commercial side of the market is technically the large specs. These are the people you want to follow, actually. When they're going a specific direction, you typically want to buy with these guys. Now, the problem is, and this is with every market, it's not just with non-commercials. The same thing applies to the commercial side. When you get a very large position held by the banks, they have no choice but to offload that position. And we have an extreme advantage, I feel like, with Forex trading over futures. And I'm going to explain what that advantage is. So basically, the cool thing about Forex is we don't just have to rely on our analysis with just one currency or one futures contract. We get the luxury of being able to pin one currency against another currency, right? That's the essence of Forex trading, is you're taking one currency, pinning it against the other. So your analysis could actually be a little bit wrong with one currency, but if it's spot on with the other one, you still might have a pretty good trade out of that setup about with your analysis, which I like, because right now, what we've been seeing is the franc has been improving, or not improving. The USD, or not the USD, just the Swiss franc has been overbought by the banks in such a big way. The banks are currently 85% short on the franc right now. What that means is they have such a big short position that they now have to exit this position. They've actually made profit. Now they have to get out of this position. And when they get out of this position, it's going to cause the franc to strengthen very rapidly, which is what we saw Thursday, Friday, because when the euro franc went down, that's actually a manifestation of the Swiss franc increasing in value. And that is because these big large specs are getting out of this short position and subsequently going long. If I were to show you the commercial data, not just the non-commercial, but one of the things we've established in the COT report webinars, and this is something I feel like we have an edge, a big edge with, that a lot of other programs that teach the COT report don't talk about, which is no one really looks at the commercial data. They like to look at non-commercial because that is your large specs. But the thing is, the commercial data is in fact the biggest market that's monitored via the CFTC. Nobody is bigger. There's no participant bigger than commercial data. And so when commercial data makes a move, it causes this big, massive uh, shift in the market, right? Now, they typically do the opposite of what non-commercial is doing. So right now, the commercial data has a very large long position on the franc, and naturally, um, uh, we're seeing the franc improve because of that. But like I said, these guys are starting to, non-commercials are the ones you want to follow. But as these guys start to exit their position, it's going to cause a reversal in the market because there's just a flood of liquidity from these banks coming in that's pushing it the other way. So like I said, these guys, they actually made some money on a franc short for a while. They are now super duper biased short, and they all need an exit. And they all need to get out. And what that is doing to the chart is it's causing this thing to fall apart. Okay, the euro franc, it's just falling off a cliff, as you can see. And I think the euro franc is probably the best one to follow. You could also do like the Aussie franc short. You could do pound franc short. You could do USD. USD franc's actually a really good one. USD franc short would be a great one right now. I think that's actually one of the top trades on the scanner. But the reason why I like the euro is because it's very clear when you look at that data again. When you come over here, it's very clear that the banks have, out of all the long positions they have, the euro is the biggest long position they have right now, and the franc is the biggest short. So you kind of want to pin the most long and the most short together. And this is kind of different logic, because what we do with leverage funds is you want the best team versus the worst team, and then you just want to go in that direction. This is kind of the opposite of that. Like, when these guys get to such an extreme, you actually don't want to follow them anymore. The logic in this is that once they get to an extreme, uh, the only other direction they can go is to get out, right? Once you have nearly 100% of the short positions, once you have nearly 100% of the long positions, the only direction you can go now is the other way, right? And so that's what we're seeing on the charts, and that's why there's absolute carnage on the euro franc right now to the downside, is because these banks are just exiting. That's all they're doing right now, is they're just exiting this position. Now, the thing that I mean, last week, this was obviously a much better short position to have taken last week. And congrats to a lot of you guys that were able to get into this last week and stay in. Um, I still have, on several accounts, I still have trades that I got in. I mean, you can see on this account that I've got a couple of trades still up here, and I have a few other accounts that have some trades up here as well. I did get in again this week. That trade is up a little bit, not nearly to the extent of the trades from last week. Um, yeah, not nearly to the extent of the trades from last week, but nonetheless, these are pretty good. Um, but my expectation, what's the game plan with this? So there's a possibility you could see a move up on this Euro franc. I don't expect this Euro franc to go up very much. If it did, it's just going to be met with more sellers. Okay. If the banks get an opportunity, like if this were to, let's say it comes up to here and reattacks this supply area right here, which is definitely possible. Okay, that's on an hourly chart. Let's zoom in so you guys can see this for reference. Just kind of, let's kind of zoom into the chart now, what we're looking at. So obviously this currency pair has just been melting away, which has been melting down to the downside. If it came back up to here, I would suspect that you'll get a move down again. So anytime this thing pops up, I'm just looking to sell it. Okay. We really just haven't had a lot of pops to the upside. It's just been continually grinding against the retail trader and even the banks. The banks are, they've been wanting to get out of this position. So I suspect we might see some volatility. That could be up, it could be down. They're just going to try to shake people out so that their ultimate move can be to continue down. Okay, so just recognize that if the market shakes you out of a trade because you had a really tight RR, just look for another opportunity to get back in. Okay, back in to sell. That should be your only focus right now is to sell. I mean, you could try to find places to buy, but it just kind of goes against the fundamental narrative that we have here. So that's how I look at it. Is anytime this thing comes up, I'm just trying to sell. Okay. Let's look at a few others. So that one, and we even have a pending order sitting on there. We might place a few others. Let's look at this Euro Yen. This is a strong sell this week. This one doesn't have a sentiment signal yet, and it doesn't have a weekly caught shift. I mean, the shift slightly benefits the direction of the long-term signal, but it's not significant enough to provide a weekly signal. But nonetheless, the signal is to still sell the Euro Yen. I took a trade on this. Let's see how it's doing right now. It looks like it is slightly down, which is what you would expect. Let's pull it up here. Yeah, it's very similar to the Euro Yen, just melting away to the downside. Very similar, right? The banks have a big long position on the Euro Yen, and they are subsequently trying to exit this position. And let's actually pull up that data so you can see. So yeah, they've got a pretty long euro position. And then on the Japanese yen, it's 82% short. So can this pair go up because they're buying it? Yes, and it was, but now we're starting to get that pullback effect because they've been long for so long, and now we're starting to see this actually pull away. So I'm kind of doing the same thing. Just anytime this thing pops up, I'm trying to get in, looking for I'm looking to get short anytime this thing pops up. Um, I think the euro yen has more to go to the downside, not just because fundamentally it makes sense, but look at this demand. This is where the demand is. Looks like we tapped into it once barely. Um, if that doesn't pop up, I think we'll continue even lower. There's actually more demand zones right here. You've got, oops, let's pull that out again. You've got more demand down in these areas as well. So there's actually quite a ways this thing could continue to drop, just so that you're aware. Okay, let's look at a few others. This Euro Kiwi strong sell, I think this one's done very, very well. Let's see, has this one, I think this one, yeah, this one's down almost, let's see, over 0.5% just today, which is kind of a big deal. Yeah, here we go. Let's take a look at this. Let's load up this chart and let's analyze this. One second, guys. I think I'm just going to close out of my, I got some trading stuff going on. I think I'm just going to close out of some of this stuff because it's really affecting my ability to host the webinar. So let me close out of a few things. Might just have to make that a routine. Okay, here we go. So and let's actually pull up that weekend indicator so you guys can see the start of the week. Here we go. Okay, so this is the start of the week right here. And it looks like it started down at a support level. It did come up a little bit. I was able to get in a couple more, like I was able to get in up here. And now it's, pulling back. Again, this one is, this is the same concept. Like a lot of these crowded market signals are really underway as we speak. So you come and look at this. Yep, it's at crowded market stage. You've got a sell, weekly caught signal. The long-term signal is to sell. When you come over to the data, specifically, again, you already know the euro is really bought up by the large specs. But then when you look at the Kiwi, yeah, it's high up there. It's not as high as the franc or the yen, but it's high up there. And we're seeing the effects of that. I would much rather, like, if this thing were um like, I don't know, 2 weeks ago, I would have loved to have sold back here back in mid-November. But this is still good right now. And let's see, how far is this from a major support level? I wanted to see if this is getting close to a okay, so we're right here. Yeah, so we are at we're at kind of a pivotal point. That's for sure. I'm gonna turn this off. Okay, so yeah, this is a major support zone on the Euro Kiwi. So, like I said, it is possible that we see this rally up. The thing that I think is different this time, though, and I've mentioned this before on the Euro Kiwi, is this is your apex high back over here on the higher time frame, and then you've just got a series of lower highs. And so, to me, this is more bearish price action than it is bullish. And so if there's going to be a time when this bottom falls out, it would probably be now, more likely than yeah, that's kind of how I see this is because of how the price actions formed as it approached this point. This to me would be the time that if this bottom's going to fall out, it would probably be now rather than going up another time and then coming down again. I mean, that is possible. We could see this come do exactly that, but I feel like it's more likely that this bottom falls out because of how it approached that level this go around versus the previous go arounds. I hope that makes sense. Because in the previous ones, you were breaking structures each time. We had a structure break right here. Um, we had a structure break right here. And then when it pulled back to the support level, it naturally went back up. This time, we don't really have a lot of structure breaks. We actually just have bearish price action, lower highs, double tops, right here, lower lows. And now we're down at this support level again. That to me says, hey, this support level may not, this support level may not actually hold this time. So, and we also have the banks who have a very large long position and they've had it for some time now. I believe they're in the process of exiting that position. With that said, though, it is possible this could come up a little bit. I will tell you though, if this does come up, I'm just going to be trying to sell that back down. I'm just going to try to sell it back down if that happens. Okay. Okay, so this one's doing well this week. This Euro Kiwi short. I'm being cautious to not sell at support levels. So I don't know if it'd be a great idea if you don't have this position already open. I don't know if it'd be a great idea to just jump into the sell right now. Um, yeah, I'm not a big fan of you just, okay, Steve's selling, so I'll just sell it right now. I think it would be better off, you'd be better off waiting for this to create some level of confirmation, and then going after it that way. Okay. Um, okay, so what are some other ones? We got the USD CAD sell, USD franc sell, NZD. Oh yeah, we have that one going right now. This New Zealand dollar long position. We have that open trade, and we also have that pending order trade going right now. This is up a 0.5% today. The Kiwi dollar long. Let's pull it up. Let's see, where did all my stuff go? I think it's just loading. Okay, so sorry guys, I'm gonna have to. I think one of the things that's happening is I've got um I closed everything out, but I think I need to refresh or something or restart the computer. I won't do it now because we're fine. We're gonna do fine. But I was just doing a lot of trading before this. And like I was saying, I have all these MT4s. I've got stock trading platforms pulled up, and I just think it's too much for the computer. So what I'm going to do is I'll probably, like I said, I need to get a VPS set up so that I don't have all that stuff running in the background when I'm hosting. So that's my bad, but we'll get that fixed for tonight and next time. Okay, so when we look at this New Zealand dollar, um, obviously the level that we initially found down here is working out. This trade is up a little bit, so that's good. We do have another pending order buy sitting down here, ready to go. So if this does end up breaking lower, that's fine. I feel like at this point, I would probably like to bring the stop loss to break even on this trade, just because couple of things. Yeah, I really like the fact that this had a nice robust move right here that sent us higher. And, obviously that's the bias we want to go. The scanner is a buy this week. It's a strong buy. So we do want to be looking for buys, but I want to be a little bit cautious though, because I'm looking at the way, right now we have this high, but then we have a lower high right here. And if this ends up being a thing, then we might actually see this pair come down. And so I don't want to be in this trade if it decides to ultimately wind up coming down to this other level that we have here. So I'm being a little bit more, yeah, just cautious. I don't want to stay in this trade if it's not going to work out. So I think that's what I'm going to do is just put my stop loss at break even on this one, but let this continue up if it wants to continue up. So let me go ahead and reply to our signal. All right, so got that trade going, and like I said, we still have this pending order down here. I like the way we've done this, but I want to, like I said, it just seems like we're building a sequence of lower highs, lower high, lower high, lower high, lower high. Um, we did grab into some demand, and that demand did hold, but if that winds up not holding, I do want to just get out, and we'll try to enter back in down here at this demand level, which is what I want to get ultimately. So All right, so there's that one. Let's look at the other really good sell right now is the USD franc and USD CAD. And that has been that way for the last week or so. We've been working on this USD franc sell. Um, I have a sell on a few accounts right now. Some of them are up, some of them are down. It's kind of a mixed bag of trades this week for the USD franc. Um, but basically, this is in fact, let me let this load here. Let me just show you the data though. So when you look at the data on the USD franc, right now the dollar is super long by the banks. They have 74% long positions and 85% on their shorts on the franc. So the USD franc has been going up for a while um, because of this, right? The dollar franc for the last several months has been going up, but it wasn't this long. The dollar used to be like 50% long, and then the franc was, 60% short. And it was just a really nice buy trade by the banks. But again, once you get into a really crowded position, it's now time to look for trades in the other direction. Um, and that's literally what's happening right now on the USD franc. But I do want to let's see if we can expand this out a little bit, and I want to show you guys places where we might be able to get some better sells. So I exited the price action trade. I want to see if we can get into another price action trade here. I just need to find a pretty good place to do it. That's my only thing. So let's pull up these order block indicators. Let's see if we can find a good zone. Um, there technically are a ton of blocks right here. You've got sell blocks here, buy blocks here. I don't really want to mess with that. That's just a ton of stuff. Let me try an hourly chart. I want to try to find something that's a little bit more, you know, spot on, and maybe something that the rest of the market isn't really focused on. Because everyone's focused on this area right here, and I just don't want to mess with that. I really don't. Um, so the places I'm thinking of are kind of up in here. Um, Kind of thinking about this area. I'm also thinking about um, maybe even this area would be fine. Um, there's a there are a couple of selling places, honestly, but I think maybe this is probably our best spot right there. And I like that because whatever took place in there ultimately broke a structure and set the market lower. So I do think that that's probably not a bad place to have another just to have another pending order there. Um, Sometimes you just have to have your pending orders ready to go. Sometimes they'll do nothing, but as long as you have them ready, um, you'll be happy that you had it ready to go beforehand. So let me break this down with you guys a little bit more. So let me explain why this is a good spot. Again, when we kind of analyze this, let's actually turn off these order block indicators for just a moment. So this is a good area because there was a defined support right there. Very similar to what actually happened right here. So this was a nice level. It's already been tapped into. I don't like to use order blocks multiple times once they've been used. So this is not a good supplier yet anymore. This one is invalidated. I would not use this one. Why would I not use that one? Because again, it's already been used multiple times. However, this one has not been used right here. We have not been tapped into right there. And so that to me is kind of an area where if the banks want to go, they could go there and find a fantastic place to offload their dollar francs, which is what I believe they're doing right now, is they're exiting this dollar franc position. And if they can get a better price, that would be a place where they would do that. And again, you look at this and you're like, okay, yep, that's support. You can definitely see that there was a support level here. We had a nice fine break of structure right here, very similar to what we had right here. and it just hasn't been tapped into yet. So it's free liquidity. It's basically free game for us to place a trade there. I think that's definitely worth having a trade ready to go. So let's go ahead and place a trade there, and we'll post that as a signal. It may not trigger today. It may not even trigger tomorrow. Um, but it's one of those trades that you don't want to miss, because if you're asleep and that trade happens, you're totally going to miss it. And you're going to be like, I knew that trade was there. I knew it was available. But we missed that opportunity, right? So we don't want to be like that. Um, right. So let's go ahead and type some of this stuff out. Oops, that's not what I want to do. Um, let's go ahead and type this out, and let's go ahead and place a trade. What are we doing? I just want to type this. There. There we go. Okay. And I'm going to short right here at the start of that order block, and then at the end of the order block, basically right there is where I want to go. And I'm just going to try to take this back to this demand down here. So that gives me a 1 to 3.5 if I can get that to trigger and do its thing. So a lot of people like this style where you can just take a trade setup like I'm showing you here, and then you can just let the trade, just sit and do its thing. Other people find this agonizing because they don't like pending orders, because it's not something exciting for them, or it's not something that they're getting in right away. Um, so I'm just trying to provide for the different trading styles. So if you like the style like this, where you've just got your pending order and you're just going to wait for your pending order to execute, then great, let's get those in there. You're going to have one of the things that's agonizing about this type of trading style, just so you know, is you're going to have plenty of trades that just never trigger. Okay. And it just comes with the baggage of trying to be a limit order trader. It's just part of the baggage. Comes with the package, right? And so you have to be patient if that's the style that you want to subscribe to. We could do more. A lot of people ask me, they say, why don't you trade on a smaller time frame, Steve, so that we could get more trades? Well, that's great. Well, then let's forget fundamentals, because there's no reason to trade fundamentals if you're going to trade on the smaller time frames. But I'm a fundamental trader. And so when you're trading fundamentals, that affects a lot more of the higher time frame. Because if you're just trying to find an opportunity that's 30 minutes long or an hour long, and you're on a 1 minute chart or a 5 minute chart, there's really no reason to be aware of, in my opinion, the only reason why you'd care about news events if you trade on a 1 minute chart or a 5 minute chart is just so that you know when news events are, because you're not trading Fed rate hikes. You're not trading um, jobs data, labor market data, if you're looking for a trade that's going to last 30 minutes or an hour. Okay, you're not. You're just not. I mean, even if you like to think that you are, you're just not. And so if you want to be an expert with the what's happening fundamentally and what's happening with COT data, that kind of stuff occurs on the hourly charts, 4 hour timeframes, and so on. It's not going to happen on your 1 minute chart. So we can still use technical analysis, and we absolutely use technical analysis on the higher timeframes. But I feel like technical analysis coupled with fundamentals is beautiful. But trying to use fundamentals on a 1 minute chart, it's crazy. That's like, it's totally out of context, because let's say you're selling the USD franc like we are, because fundamentally it's a sell. Okay, let's say you're selling the Euro franc because fundamentally it's a sell. Now, if you're on a 1 minute chart, in fact, let me show you this. Let's actually switch down to let's do a 3 minute chart actually. See, this is a downtrend on the hourly time frame, but if I go to a 3 minute chart, you might actually find a different story, right? Like, let's come and look at this Right there is a downtrend, but I think if you look at this from the last couple of days, you might actually see an uptrend here. Let's see if I can get this to show up on this 3-minute chart. Here, I'm just putting that signal together too right now, so give me just a second as I put this together. See, this is a 3-minute chart. Let's see, let's get this to finish loading, and you'll see it here. And that's more of an uptrend, right? And there's been several demand opportunities to buy in demand, but fundamentally it's a sell signal. So what's going on? Well, it's because the 3-minute chart and the 5-minute and the 1-minute chart have nothing to do with fundamentals, right? Other than the only thing that matters if you're trading on a 1-minute or 5-minute chart, the only thing that matters about news is the very fact that here, let me go back out to my higher time frame. The only thing that matters is knowing when the news events are so that you know either to be in the market or to be out of the market. I think for most scalpers, it's more of an opportunity to stay out of the market because they don't like to trade a lot of news. They just want to trade sheer price action. And you can totally just trade sheer price action. Just know that you're not getting any type of bank help, fundamental help. That's not going to be on the docket for you. Um, um, So that's why I trade on the hourly 4-hour time frame is because I feel like the fundamental things and the scanner things of the market matter more on those time frames. But it's another thing that's important too is knowing. Um, I think a lot of people try to use the scanner to their liking, and sometimes that's okay. But the problem is if you try to take the scanner to a 1-minute chart, it's going to be useless. It really is. It's not going to help you on an hour, on a 1 hour or a 1-minute time frame or a 5-minute, really. um because the whole point of the scanner is to give you like, hey, this is what the market should do this week or even over the next couple of weeks. This is what we're expecting. Okay. And so what could happen in the next hour is totally irrelevant to what's going to happen in the next week or two, right? So I've had people who don't know that, and that's my job to make that more clear. That's why I have these webinars to make it very clear. I have people that come and join, and they they're so excited about the scanner, and then they start using the scanner to a they use it on a 1-minute chart, and it's like it's not meant for that. Um, it's totally out of context at that point, and then they'll say it doesn't work, you know, and it's okay. It just means there's the communication's not correct then, and that's where I need to make sure the communication is a little bit more spot on with what we're trying to accomplish with it. I have some trades that I've been holding since last week. I have a trade right now that is up $8,000 on the Euro franc. Um, live account up $8,000. Um, Scanner signal. Okay, top scanner signal. Sell the Euro franc. But I've been holding it for a week. It's a week-long trade. It's not been this it's not a trade that I've been, it's not something I did in 2 hours and said, look at what I did today. It's like, no, look what I did over I invested into a short position, over a week-long period. That's the context that we're after. Um, I could see a way where you could have lost on the Euro franc if you had sold, let's say you had sold at a demand level on a 1-minute chart and then it goes against you 20 pips. Has there been a 20 pip, 30 pip move on the Euro franc in the last week that's gone up instead of down? Yeah, totally. Everything has moves like that. Um, so yeah, you could get yourself into trouble if that's the context that, and again, it's the context that we ourselves are bringing to the table. Um, and it's going to be way easier for you to, and for us to bring the scanner to or bring us to the scanner than it is to bring the scanner to us. Um, right? So if you're already a fundamental trader, if you're already if you already like to trade on the hourly time frame, if you already like to trade on the higher time frames, then scanner is going to be one of the greatest tools you've ever used. It's going to give you some of the greatest insights on what the banks are doing on a higher time frame. But if all you do is a scalp, and that's fine. I can teach you how to do that type of trading too. But don't try to drag the labor market. Don't try to drag Jerome Powell into your 1 hour long trade, because it has nothing to do with those fundamentals. I've done that, and I'm not trying to point any fingers. I'm just trying to say I know this because I've literally done that, and um, I had to take some humility to be like, okay, yep, I'm not doing this right. Um, let's trade things within the context of how they're meant to be traded. Okay, I'm just double checking my numbers here. So I've got an entry at 0.87963 and a take profit at 0.86913, a stop loss at 0.88271. This is a USD franc short as a sell limit. Okay, ready, set, go. Perfect. Awesome. Okay, so that's another good one to put in your portfolio, guys. Again, it'll probably trigger, but it might not trigger for a little bit. And maybe it won't. It's possible too that this USD franc just goes straight down. I kind of doubt it. The way I'm viewing this price action, it kind of looks more bullish to me in the short term, and then bearish fundamentally long term.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve Scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code Friend of Steve, that's Friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Yeah, so, and I've been holding I've actually, I don't know about you guys, but I did just take straight scanner signals this week. I took every single one of these, um, just holding them, not huge positions, but I did take some small positions. And then I went a little bit bigger on the Euro franc just because, it's the Euro franc and it's a strong sell. USD franc went a little harder. I'm still holding that. And then there's a couple down here that we're in right now. I'm trying to find, this is one of the things I'm trying to work on right now, is when I look at the data, as far as big holdings, a lot of these trade opportunities I feel like have really come to fruition. Like a lot of euro pairs have already come down against the franc, against the CAD, against the yen. A lot of those have already come down. quite a bit in the last week or so. So I'm trying to find even more opportunities to um, find a crowded market. But a lot of these crowded market signals are, I mean, it's great. They're working. They're working. I'm just trying to find what I'm trying to find is this. Let me show you an example. So the Euro CAD a few weeks ago was the number one overbought currency pair by the large specs from the COT report. Okay, the Euro CAD. And it still is one of the biggest, right? But this, let me show you this on an hourly chart so you can kind of see what I'm talking about. Okay. I think at the beginning of November, or yeah, first week of November, something like this, we got a crowded market signal on the Euro CAD. And so I'm just trying to get this to load up here, guys. I do apologize. I'll get this right for next time on my charts. Usually my charts just load up right away. I just have way too many things running in the background. I'll get that fixed for tomorrow. Okay, here it is. So here's the Euro CAD on the higher time frame. This has been coming down, and I expect it to continue even lower. But about the beginning of November, so this signal was kind of early. So somewhere around here, we got a signal to start the it started telling us that the banks were crowded right here. And you're actually just a few weeks early to this. So this can happen. Like you can have a crowded market signal where you're a couple of weeks early to the trade. And that's exactly what happened right here is, for the next, let's see, how long did this take? This took from here to here. It was basically 2 weeks. Yeah, two weeks of carnage. So you would have maybe started selling this here and you would have been like, what the heck? I thought this was supposed to go down. So I want to show you guys that this can happen with the long-term signal. The long-term signal could actually put you in the wrong direction for a week or two. So just be aware of that when you're using the scanner, that the scanner does have the capacity to put you in the wrong direction, at least from the long-term side. I mean, anything could put you in the wrong direction. Sentiment could put the cool thing though about the sentiment offsets the long-term signals. So like for example, if right here you got a signal to sell based off the scanner, but the sentiment said to buy, that buy should help offset that scanner signal to some extent. You might get more just like a sell signal instead of a strong sell. And the strong sell won't start to kick in until this actually starts to pull back because the sentiment won't let you get into a strong sell signal. The theory is the sentiment is like a check and balance on that long-term signal. I hope that kind of makes sense. So it says, okay, hey, the long-term signal is a sell, a strong sell, but if the sentiment's not ready yet, it won't issue a strong sell just at that moment. So that's to kind of create that check and balance so that you don't get into that sell too early. I hope that makes sense. Um, and that's another thing too. So George says, would it be best to wait for a break of structure? Yes. So you could wait for like this would have been ideal with the Euro CAD last week is to wait for this to break that structure right there, and then you're in. You could do something like that, or you could wait for the scanner sentiment to align with the long term. If you get sentiment and the long term signal to align, then there's a really good chance. But that's one of the geniuses I feel like of the scanner. I just wanted to share that with you guys is I thought about that issue of getting into trades too early. And so the cool thing is the sentiment actually kind of like it puts some kind of cap on the like if the long-term signal wants to shout from the rooftops, hey, we're about to go down, hey, we're about to go down, but it's like, hey, but prove it to yourself first or prove it to us first. And that's what the sentiment does is it says, hey, until you actually start going down, we're not going to let you issue a strong sell signal. We'll let you have your sell signal, but strong you can't have until you actually flip the other way, which I think is so cool. Like I built it that way so that you don't get that early signal. Like instead of being 2 weeks early, we'll either be just on time. You might um, you may not get the exact top, but maybe you'll get it Like, for example, last week we started selling the Euro CAD. We got a strong sell signal last week, and that's because sentiment was either neutral or at that point it already became a sell signal. So if sentiment is a sell and the long-term signal is a strong sell in crowded markets at 5 out of 5 stars, then that's going to give you permission to say, yep, this big move is probably about due now. Okay. We'll probably continue to tweak it, but that's what I love about the overall signal is I've kind of built that to give you the um, kind of like the moment when it's supposed to happen rather than just saying, hey, maybe over the next couple of weeks, focus on this, which it does already. But the overall signal will say, hey, this is probably now is probably the time to actually go ahead and take that trade opportunity. Okay. So anyway, there's that one. So yeah, you could be in the wrong, like what I'm saying is if you just follow long-term only, you could be in the wrong direction for a couple of weeks before this thing actually goes in your favor. Um, yeah, you would have recovered, if even your sell that you got into right here, if you had taken a sell right there, by now you would have recovered that loss if you had stayed in. But that is a big, big drawdown to stay in for 2 weeks, and we really don't want to have that. And so, um, hopefully that's the point is hopefully the other indicators kind of put you in that direction, um, kind of get you ready for that direction. So when it's time to go in that direction. Johnny says, not would there have not been any strong sell on the drawbacks? Um, I don't know for sure if there would have been a strong sell. It depends on the other two things. So I can almost guarantee that sentiment would actually tell you to buy um during this move up, because the way sentiment works is retail traders pile into shorts as the market's going up, right? So the sentiment would probably say, hey, this is a buy. And then the long-term crowded market would say, this is a strong sell. And those two would kind of offset each other to some extent. Maybe you just get more of a sell signal instead of a strong sell, or maybe it would even just be neutral. But there is a third variable, right? That third one is, is the shift in data, right? So if you had a positive shift, that's going to give you a buy signal from commercial data. If you had a positive shift, then you would actually continue to buy, or it would just damper out the long-term signal. It would just completely damper it out. Um, Now, if we had a negative shift during this same period, if we had a negative caught shift and the long-term signal was a sell, then that probably would have given you a strong sell. So that's another thing to keep in mind is it is possible because there's three different variables we're looking at. Hopefully, those three different variables either completely align with each other or they offset each other to keep you out of a bad trade, which is the whole point. Nothing's going to be 100% with what we're doing, but the idea is to hopefully get you that edge that you need to be in the right direction most of the time and know which pairs are poised for that move and which ones are not. All right, guys. Well, let's go ahead and wrap up. We've got several classes tonight to come to if you guys want to come to those. They're also recorded if you want to catch them later. We got the sentiment and the COT report webinar. So appreciate your attendance today, guys. Thank you for coming. Have a fantastic rest of your day, and we'll see you guys in the next webinar.